Good morning. We have a major August 2012 update on the OEX.X, referred to as S&P 100. We've covered small cap, we've covered mid cap, but we want to cover this one because once again, 2012 has had a very interesting year in markets. And the weekly is that you can take a look at here's the 2012 weekly tops, and here was the 2000. Now we were involved here. We were also involved here. We were involved in the 2009 bottoms, and we were involved in the dips in 2010 when QE2 came in here, and how the S&P 100 broader indexes. That's all of these great companies. They are in the index for a reason. You've got Amazon in here, Amgen in here. These are great companies that we have in the USA. At certain times, Caterpillar, well, it's a little different story now, but it doesn't matter. They're still in here. Costco's in here. These companies are very important. Look at Gilead Sciences, Biotech, got Google in here. Goldman Sachs is still here. Okay, some of the beaten down ones like Halliburton and whatnot, they're still in this one. JP Morgan is here. MasterCard. Lots of great companies to trade from. Qualcomm, we cover all the time. So, once again, making a market and investing are two different subjects. What we want to bring out is to show you this bottom line, and I'm just showing it from this perspective because that's the bottom and that's the top, two top reversal, bam, that was in that period of 2000. We came down here, we undercut it, but why does it matter? Because if these companies that are in that index and the S&P 100 are leading the way, then the bull is in the market, and he is. Now, whether it's a real bull or not, economically, is another story. Right now, technically, the way that it's set up is it's possible from the longer, broader weekly range in the S&P over, from 2009 to the 2010 here to the 2011 consolidation and breakouts along each way with the broader corrections that we have been involved in each and every one of them. And we have. And how do you know that? How do you validate that? You go right here and you see our live analysis during markets and things like we're doing today. Stockmarketfunding.com. Go to the stock indices videos. They're all there for you. Now, I'm going to show my MMT staff here on Saturday why we could possibly have what we call a breakout and what that 2012 year looks like right now on 8/4 of 2012 and how to trade it. So on the weekly level, you got the 10-week coming up. If it crosses over, that means when you come down, the leadership stocks in that index is going to give that market support. For right now, remember, it's the dog days of the summer calendar month of August. However, in the shorter term, when we take a look at how the buy and sell scripts have been working. And if you want to learn more about what we're talking about, to learn more, to understand our videos, we will do this for you. We'll be happy to introduce to you why the top 1% steals from 99% using advanced technologies and high-frequency algorithms designed to take money away from the retail investment community. SMF has built its own market maker trading system. And we have. Now, when you learn more about what's on this Market Maker Trading School page, you're going to learn more about who we really are. And what you want to understand is how the world changed with using various different kinds of programs that are in the buy and sell execution. Read it all right here. It's very important because that's all part of this chart that I'm telling you about right here on the weekly. Yes. So what I would like to do is to show you that the exchange model is working nicely because each weekly one within the price volatility at these support levels built consolidations, but it's been mathematically ascending and buying off the dips within the leadership S&P 100. There's 100 of them in here now. And within the broader index, there's a few of them that really do well. Apple is being one. Amgen is good. Amazon is good. They all have different dollar price intraday trading ranges, but on some days, some of them have some really decent movements. We only cover the ones that have the greater price ranges and or the good news on the earnings cycle. You're in a bullish breakout ascending pattern weekly. Can high frequency push it through there? Yes. Are we seasonality in the right spot for big time breakout? No. If you take a look at the last 20 years, the S&P 500 has sold off in the month of August. And I'll just be up front. Now, we're at the wall of resistance we were shorting this index up here. We were shorting leadership stocks in here, all part of the correction phase that we had called for. But then when we got down here to this bottom, and we started breaking above these half-weekly bars here that SMF always covers, you can see that ascending accumulation in the high-frequency model. Every time it came up, they walked it higher. They came up, they walked it higher. That's how that electronic tape was working. They were leveraging up the moves. And that's when you learn how to go with the directional price movement. Understanding why the S&P 100 dog days of August of calendar 2012 with an ascending weekly breakout from its original calendar yearly reversal has come to a major wall of resistances here in this price channel. Now on the daily, of course, you're in a very long multi-year breakout phase off every single bottom. You've gotten back up to these major necklines in this S&P 100, where in 2008, during the financial crisis, we were real nice and short this whole market. Okay, a lot of that content is on our old website. We will put some articles and blogs and things back at that time when we were doing it. But once again, it was where those markets were truly going to change. They did change, and they started burning right here. And I'm giving you the history as it's a major update. But you need to know within every correction phase that we've had a major stimuluses off of these bottoms here in this index. Stimuluses that these S&P 100 stocks, they're the big ones. Apple's in it, the 100. And you're right back up here at that correction. That's that wall of resistance, looking at it the way that you should. Now, let's break this down. Here it is. And it's a major update. That's why the video is longer, but it's for the MMTs because we also need to let you know that when you go back over here to the 2008, that's 648.72, we're right up here. And we come up here, and I'm telling you now, when you go back over here, and you can see my pointer right here, MMT, this is what it looks like. When we come up to that wall of resistance, we're going to look and see how far in the dog days of August can they break it out, because if it ends right there, we will have a special page for the OEX index options. They're not tradable all the time. However, both on the call for the great breakout sides and the put side when we have these corrections in here, look at, you go long, you short, you long, you're short, but now we're coming right up here at the high. There will be MMT special pricing that we will give to our market maker division and within the index using the OEX.X options. Now, let's take a look here at that wall of resistance on this daily level. I'm going to draw the simplest trend lines, and the high frequency trading models are going to have to break it right through here. This is the major one. This is where we were doing our shorts. Right here. Bam. We got that leg and the counter trend to the next bottom, but when it put that bottom in, that's when we were getting long, and that's when all the European volatility came in. But the S&P 100 is a major index, and you can clearly see off of these bottoms, but you can clearly see that when they did test their tops, that they had their shorter reversals, which made money, but then they came right back and made the higher highs, And then they started to set it up where within the ECB announcements and Mario Draghi and Ben Bernanke and FOMC stimuluses and headlines around the world is that within the high frequency model, they've been pushing it up higher off each major support level, such as the 20-day and the 10-day simple, and up you go here to this major resistance level starting the dog days of August. The leadership stocks start to break down, like the Apples in here, and the Amgens and the Amazons, and the American Expresses, the major companies in here, the Googles of the world, the Gileads of the world, all of the major stocks that create the most price intraday volatility is what's going to move the S&P 100 OEX. I would simply like to point out to people that there's lots of money working these option pits at a certain time. Because if you're the only buyer and then they go take it up in your direction, you just simply sell it. So you don't have to have a lot of volume in here to make money, is what I'm telling you. It's a separate analysis, but there are other tools to use to make money on these movements in these major S&P 100 indexes. And you can clearly see that these tops right across here, reversal 1, they tested, reversal. Now we're coming back up here. And we're going to hit that wall of resistance. That is going to be a major barrier if you can break above here on Monday and going into there. It's a major yearly update. You've got everything running worldwide. You've got high frequency all in the markets. It's everything that we try to bring to you here as we do. All you have to do is go up here and click on these tabs. You'll be able to see what we're doing live. And you can join our free market maker sign up right here as well. Once again, I'm going to conclude this video. Long-term bull in play from the original financial crisis right here at major topping resistance levels.